to what is our bread and butter here. We're watching big news today. The Federal Reserve widely expected to raise interest rates today in its first policy meeting under new chairman Jay Powell. But what will he say in his first news press conference? Doug Flynn, certified financial planner and co-founder of Flynn Capital Management, and Craig Dismuke, Vining Sparks chief economist. Both of you guys joining us now. Thanks for being here. Doug, I'm going to start with you. It seems like a lock that we're going to get a quarter-point rate hike. That's what everybody is expecting. Yes. But there's a lot of talk out in the background about whether there will be 3 rate hikes this year or 4. We had 3 last year. Will there be yet another one? What is going to be the market reaction today as we look at the minutes and we look at the notes?
Well, yeah, I think the futures market is pricing in probably about a 40% likelihood that we're going to get 4 rate hikes instead of 3. I think what you're looking for today is to have the new chairman talk about how the Trump tax cuts have really been more of a positive to the economy than previously anticipated. So that's the language that you're going to start to see that maybe begins the discussion of expecting more of 4 instead of 3. And so that's obviously showing great signs of strength in the market, but the market has to react to that. I'm more concerned about the bond market and the long end of the bond market with interest rates going up as much as they're about to go up.
Okay, well, lots of changes obviously coming for investors, and here you're seeing the yield on the 10-year down coming into this just marginally here. Craig, turning to you now, what kinds of changes, if what Doug says is right, that we're going to get 4 rate hikes here, what kinds of changes should people be making to their portfolios?
Well, I think it'll be interesting to see how they word this today, to see if they start leaning towards 4 or not. I don't think that's a done deal at this point. When you look at the balance of the committee, they were really leaning towards 3 coming into the year. And in order to see them project 4 rate hikes this year, you would have to have 4 people who were projecting 3 hikes raise those forecasts. And I think we'll see the dots move higher. And so I do think you'll see a little bit of traction towards potentially a 4th hike. I think the real question for me today is going to be, are the dots increased on the short end, so the 2018 forecast, or is it going to be the 2019, 2020, and the longer run forecast? The reason that's important is because if you see them moving in the 2018 forecast, that means that gradual is going to be faster. I don't think the markets will react well to that. If you see them moving on the longer end, 2019, 2020, et cetera, that means that gradual could last for a longer time. And I think the markets can digest that just fine.
All right, so I want to get to another big story today that we're paying a lot of attention to, and that's the Trump administration setting up tomorrow to slap as much as $30 billion in tariffs against China on steel and aluminum. That could be coming tomorrow. Could it take effect Friday? But it seems to me that this whole scenario is sort of in a slowdown mode as the administration says that they're going to talk to U.S. companies to see what they make of this. Doug, as you look at this, I think that a lot of people are worried about trade war. Is this the trade war?
Well, there's going to be some limited economic impact in the short run with these tariffs. But that's the real question is, will this turn into a full-blown trade war with China or elsewhere? And the real impact is going to have to be seen on corporate earnings, because that's ultimately what we're looking at. And right now, that outlook is still good. So any downturn that might happen is really a buying opportunity. Let's put it in perspective. The last 12 times that the S&P earnings growth was greater than 10%, the market ended the year positive all 12 times. So we have to see, is this going to turn into something bigger than just a limited economic impact? And that remains to be seen.
Well, Craig, that's a big question, right? The rhetoric has been hot and heavy on tariffs coming from the president. But as you begin to really look at what they're talking about doing up close, it seems like it keeps getting smaller and smaller and smaller. In fact, there are several steps to be taken before these actually go into place. What do you make of this? Is this overblown, the reaction to this?
Well, I think the headlines are probably overblown. The market reaction, you'll get a quick market reaction. We're seeing markets are a little bit more volatile now. As the Fed withdraws its support for the markets, you're seeing more volatility on a day-over-day basis, and so that's a natural process. I do think when you look at the big picture, we have a large trade deficit every year. China makes up over half of that. Bilateral trade with China makes up over half of that deficit, in over $330 billion last year. And the administration is targeting about 10% of that, and they want to try to make trade with China, fair. And I think that's an important thing to keep in mind. I'm all for free trade. I don't want to defend protectionist policies, but when you look at the WTO data, China is one of the least free countries. The U.S. is one of the most free,
Right.
and I think they want to make it more free, and that's it.
Well, there's a long way to go on this one, and I'm sure we'll have both of you back to talk about all of it. Doug and Craig, thanks so much for coming in today.
Anytime.
Thank you.